Hello, I'm Rich Stoeckel, Associate Portfolio Manager here at Boyum Wealth Architects. Rising gasoline prices are something we all notice immediately because they affect our daily lives in a very direct way. Beyond what we pay at the pump, higher energy prices can ripple through the economy. They can influence inflation and even shape financial markets. I'll walk you through what's driving today's gas prices, what it means for consumers, and why investors should keep a long-term perspective. First, let's look at where gasoline prices stand today. Gas prices have increased by more than $1 per gallon in just the past month, moving quickly toward levels that begin to strain household budgets. While prices remain below the 2022 peak, the speed of the increase matters, especially for families who rely on their cars for daily necessities. For many households, higher gas prices act like a direct tax, leaving less room for discretionary spending or saving. Next, it helps to understand what actually makes up the price at the pump. Only about half of the price that you pay at the pump reflects crude oil costs. The rest comes from refining, transportation, distribution, and taxes. This explains why gas prices don't always move one for one with oil prices and why regional differences can be significant. Because energy is a key input across the economy, higher fuel costs eventually push up prices for goods and services more broadly. Finally, rising energy prices have implications for inflation and in turn for the Federal Reserve's decision on interest rates. Rising energy prices feed directly into headline inflation, which can reverse recent progress on cooling price pressures. Markets have already adjusted expectations for Federal Reserve policy, with fewer rate cuts and possibly higher rates now priced in. While energy shocks are typically temporary, they can still create short-term volatility for both stocks and bonds. And that is it for this week. The big takeaway is that the most important thing remains staying disciplined, avoiding overreaction to headlines, and keeping a long-term financial plan firmly in place. As always, please reach out to us with any questions, and thank you for watching.